Will September's stock market performance beat out last year's 2% gain in the S&P? Some of you remember last year everyone was quite bearish and getting short going into early September. However, the things we were looking at were quite a bit different. Let's look at some charts. This weekly chart of the QQQs, which was still showing the most positive relative performance, shows we had a correction from early July into early August, which is when we turned back to bullish. As you can see, the AD line here had broken out to the upside again, and we had a nice run up to the end of August, a 2-week pullback here, and then reversed sharply above the 20-week, off to the races until the end of the year. We'll come back and look at this chart a little bit later, but basically that was the scenario. This year we see no signs yet of heavy shorting or put buying, and last year there was a big imbalance in terms of short positions in the S&P. So let's look at the technicals. As we just finished another month, it's always a good time to review the longer as well as the short-term analysis. Another strong month for the NASDAQ, or for the NYSE composite, pushed up 3.4% in a new high for the move. You can see that the R1 has been exceeded, with now the R2 here at 22,500, about 1,400 points above where we are. You see this coil we had back in 23. The setback in the summer was quite violent, but created a very nice buying opportunity. AD lines, NYSE stocks only, as well as the NYSE All AD line, both made new highs last month, so major trend is still positive. Looking at the weekly data, you can see the SPY formed a doji here just above the R1 resistance at 641.98. We actually got up to 649 during the week, and then closed back obviously about where we opened at 644 area. So volume tailed off a little bit. Certainly not a lot of upward progress over the past 3 weeks. S&P AD line did make a marginal high a week ago, and is still well above its moving average. If we get the correction I think we made this month, we could easily drop back to those moving averages. Stocks only AD line, had staged a breakout, kind of lagging up until June, but then it's looking pretty good. It made a marginal new high recently. And the NYSE All AD line, those of you who haven't seen my video, so the New York Composite has a bunch of stocks as well as a bunch of bond funds, ADRs, a bunch of other things. And so this measures the advanced in declining data based on all those, whereas this is just on the stocks. So they don't always move higher or lower together. The buying last week really fizzled out. We had a sharp up day here at the start of the week. About 70% of the S&P stocks were higher. On Friday, they were just 13% higher. Similar sort of pattern in the 1600. Mainly, this is skewed to a bit because of the strength in the small caps. And then we have the NASDAQ, which you can see, S&P 1500 was about flat on Friday. Here we had 38% of the NASDAQ 100 was lower. So, that could be the start of a more meaningful correction. I have not really trusted the small cap rally, and I still do think this is not the time to jump in. You can see last week I've been looking at the IJR. Was a good entry back here in this down week, and but right now it formed a doji last week. It's above the pivot, so that's IJR is a symbol, so you look for support here around 113.61, 5 points roughly below where we closed last week. The AD line not confirmed, higher highs in price, lower highs in the AD line, so that's also a problem. If you look at the daily chart, you'll also see some divergences on the daily AD line. It peaked in July and has been forming lower highs, even though we've had a rally up from this level around 117 up to 119. AD line is not supporting that move. Of course, some of you who've not been following my videos might wonder how we got here. This is a chart that kind of drills it down. We had this correction, this down week here in early February, and followed by the next week, which is also down. We broke the 20-week EMA, got well below the Stark bands here, so that you can think of this as a rubber bands being really stretched on the downside. It never stays down there forever, just like it doesn't stay above the Stark bands forever. And got extremely oversold here, and then just a couple of weeks after the lows, we broke out in the AD lines to new highs. That was a sign that the SPY would also make a new high, which of course it has. Below here we have the difference in the bullish percentage in the American Association of Independent Advisors survey minus the bearish. So right here it was minus 40. That meant there were 40% more people who thought stocks were going to go lower in the next 6 months than stocks were going to go higher. We turned up, so now it's about flat, minus 4%. So, my view is that this is going to continue to move higher over the next couple of months and likely get up above 10 and up into the 20 area. Right now, you can see again, this we're bumping into resistance in here, so if we get a setback, it should be a good buying opportunity. Looking at the weekly chart of the QQQs, we scaled out of our leveraged long positions a couple weeks ago. You can see we're bumping up right next to the R12, which was at 567. We had a low here, or a high rather, just above 580. Also formed a doji, and looks to me it'd be vulnerable down to the this area in here, which is like 544, and down to maybe 530. AD line here, from my AD course, you can see it's losing some upside here, so wouldn't be abnormal to see a further pullback, but the longer term trend still shows higher highs, so that suggests that haven't given up on growth stocks yet, and we should know more in the next month or so of whether a correction will be an opportunity to buy growth again, or whether the weight of the evidence will shift more negative on the growth stocks. I look at a ratio, of course, of IWF, which is the Russell 1000 growth ETF, divided by IWD, which is the Russell 1000 value ETF. So when this is falling, value is leading. When this is rising, growth is leading. We had a breakout here. We had a sharp setback in the past week, so we're watching. We still think this is likely going to be followed by another push to the upside. No real strong sell signals yet from the MACD. They're about ready to hook over, so it will be interesting to watch. I probably will not take as big a slant in terms of growth over value as we did at this April-May lows, which we bailed into the QQQs, XLK, etc. Not sure that'll be warranted this time. The daily QQQs looks a little more toppy. You can see we pushed up above the R1 on a monthly basis. That was at 578.21. The R2 is at 591.40. We have a pattern. We rallied right back up on Thursday and then closed lower on Friday. You can see the AD line you know, it did not make a new high with prices up here and is still in a tight range, closing barely below its EMA. Had a really nice buy signal here back at the end of April when we broke this trend. And below here we have the relative performance that measures how the Qs are doing against the S&P. So when it's falling, the Qs are weaker than the S&P. When they're rising, it's stronger. So we dropped back below the moving average soon after the highs right in here, and just rallied back up to the declining moving average where this arrow is pointing. That's not a great sign. I mean, we could still, you know, if we have a strong day of growth in the Qs over SPY, this can reverse back up to the upside, but also, you know, a lot more blue sky below, so we could see a further drop, you know, below last week's lows would be a short-term negative for the Qs. Let's look at the market from using some of our other indicators. You know, here we have the VIX, you know, so resistance is right around the 20 area and then about 22. VXN is looking a little more positive, as I would expect given what we just shared with you on the underlying. So we could see a new uptrend, you know, in the VXN. Would typically coincide with a market decline. Could be just a short pop like this, or it could be a more long-lasting sort of rally. We'll keep you posted on that one. In terms of sentiment, you can see the bullish, according to AAI, increased to 34 from like 29 or something the prior week. So it's turned up, you know. So I think we should get back and likely above this 45 area. Down here below here, you can see that the bull minus the bear, you know, had a pretty sharp drop here. So it too, I would expect to show a wider opinion of the growth, you know, of that positive outlooks for stocks rather than negative. Of course, we have the a couple of weeks we have the FOMC meeting, and that may hold the key. On the NYSE, see new rally highs here last week. So it's, you know, common stocks are doing better than some of the more selective. You know, new highs, you know, didn't quite take out the early August high, but we still could. 108 versus 7. No pickup on the horizon yet in the number of stocks making new lows. If we look at the NASDAQ composite, you know, it shows a sort of a similar negative formation that we saw in the Qs. Nice rally up, then a big engulfing pattern down because it was down 1% on Friday. Also some divergences in the number of new highs. So we have, you know, like 450, 370, 250. So, you know, that's definitely a divergence. We won't get worried about that too much until we see a pickup, you know, in the number of new lows above 250. We'll also keep you posted on that. Here we have the daily charts of the SPY and ED lines. You know, higher highs here, not a lot of upward progress in the S&P AD line, though it does have a high here, a higher high over a week ago. So it's still positive. You know, drops below its moving average, that could happen, you know, with a sharp down day, you know, like a 3 or 4 to 1 negative breadth. Similar for the stocks only, is acting a little weaker. You know, they have support, you know, levels here. Those are the first support levels. And so that will be determined. I would expect sort of this area to hold, and the stocks all, of course, is acting even better than the stocks only. So it shows a positive trend heading into the week. Let's look at the sector report results. Start off with this other percentage of stocks in the XLE, XLB, etc. that are above their quarterly pivots. So big move in energy, 91.7%, you know, above their quarterly pivots. You know, and the other most positive ones are XLY, 83.3, XLV 83.3, XLF, which jumped to 100%, and XLC, one of our favorites, is still positive. On the downside, you can see tech's gone down to 16.7. You have to go through a period. If you look back into April, we had single digits, 17.7 for about a month before that bottom occurred. So we'll keep watching that. XLP is down below 50, okay, as is XLI. So, for a refresher course, for those of you who haven't seen this before, so we kind of look for moves below 50, back above 50, for signs of the next winners. So XLV is one we like. XLC, we're still long. And XLU and XLRE, we're still in long positions in XLU on a yield base. Growth, 100% or above their quarterly pivots, and value, is about the same. New positive weekly for XOP, that's the oil and gas exploration ETF, and a negative one for XLP. Pretty much you can see this chart. This is a chart of the S&P triple long XL, and you can see it gave 280. It gave a sell signal in early on Friday, a stop signal. In other words, it stopped out the long position from here, and then by the end of the day it flipped back to go from flat after being stopped out to negative. The day indicators down here look like they have some room to move lower. So the daily is still positive as long as it stays above 190. Appears to be where the stop would be. Okay, here's that table we just discussed. And for the week, 5 sector ETFs were positive. As SPY was down 0.4%. XLE led the charge, 2.6, then XLF 0.9, and then really the action in the other three, XLB, XLC, and XLK rather, was not very impressive. On a monthly basis, XLC was the strongest, up 5%, followed by XLY up 3.2, XLF up 2.3, and XLV. It hasn't had a winning month in this table all year, so it's up 2.2%. And if you look at the weekly, XLRE still the weakest. XLK was down more or less than 1%, and XLP was about the same ballpark. Looking at the sector ETF table, I included here the monthly signals. So all of these ETFs had new monthly DTS positive signals. So we have XLY, XLF, XLB, IWM, IJR, that's a small cap, the 600, XOP, ITB, and the home builders, both home builders, the ITB as well as the XHB, and then the financials. So it's pretty interesting signals here. Subscribers will be able to peruse this. You look for, remember, these green in this AWK is the sign that these are raising or are outperforming the S&P on a weekly basis. So green is good. Those are the ones you wanted to concentrate on at this point. Energy is probably going to take a further rally before it'll flip over here. But quite a few of the other ones that gave monthly buy signals are showing positive AWK. Some interesting other developments. The TQQQ we got out of a few weeks ago, and now it is positive weekly, negative on a 3 day, and positive on a daily. So that's interesting as we head in there. Also consumer staples gave a weekly sell, as we noted before, also have a negative WKS. NVIDIA is not on this list, but the semiconductors, show a negative 3-day and a daily. RS stuff was fairly interesting. So it looks like, we talked last about we were turning up right about here last week, and we'd broken this downtrend. So now it's more encouraging that, the fast is above the slow, suggesting that finally a turn looking more likely in the energy ETFs. Also, supporting a bottom in XLF, the financials, because we're holding above its moving average. The short term in light green is rising, as is the longer term. And if we look at the consumer discretionary, also kind of broke out above this resistance, well above, the fast is well above the slow. Technology, not quite as clear. So, this could be just a pullback in a major trend. If so, we would expect this to see sharply higher in the next week or two. Conversely, we could just rally up a little bit and then have it roll back over. So, we did, take some profits on the rally last week in the XLK, down to 50%. So, feel no problems with that. Here are, the holdings, from the Viper ETF report, and pretty much, let's look at this. We can look at a few of them more detail. Gold is a starlight winner. We saw this action right back in here at the start of the week, so we added to the longs. Volume came in there, so that's looking pretty good. If we can break out above this wedge, 291 on the downside, 317 on the upside, so that's 25-point range. Get you up to 344, 342. The bunch, or the most convincing chart for ITB, pushed to a new high the prior week. Still shows a pretty positive trend here. Don't see any signs yet of a significant top, but we are watching it. We've had a great run on the upside, and you can see the weekly chart closed above the yearly pivot finally, which is at 108.72. So we need to hold above that on a weekly closing basis. But you can see both the RS and the OBV are strong. Let's go back at the weekly ETF report before we wrap up this session. You can see we've been including, we know a number of you as well as myself have some of these Vanguard ETFs as part of a retirement portfolio, so I've been providing this to you. I thought it might be different. Pacific, the VPL showed a daily negative signal, but most of this is pretty positive. Only the VDC, which corresponds to the XLP, is 3-day and daily negative. The VGT, that's the equivalent of the XLK, has given a 3-day, but not a daily or a weekly. Same sort of thing. Utilities gave one earlier in the week, and but all of that, it's all pretty positive. If you look at the subscribers that got this already today, so let's go down into the sector where that's usually the meat of the report, and so in the energy space, you can see PCX, pretty much all green here. Hess has a 4-hour negative, but all the rest, VLO just gave a weekly, as did MPC. So you'll need to be looking at a pullback. In materials, VMC, may be ready to pullback may be over. Of course, Newmont looking very strong. Industrials, not much really here. You can see we're looking at it's 66.7 positive on a DTS and only 41%, so below 50 on the 3, or on the weekly. So we're not really touching anything. Starbucks and McDonald's showing some green side of life, but also, to refresh your memory, we'd like to see an area where you have a bunch of red, and then you start to see green developing, in the 4-hour column and the 1-hour column that, switching to that then are turned into a positive DTS and a positive 3 DTS. That's what we saw, in late April and early May. So healthcare, also not, most of it's pretty green. So, but there are some, Amgen, etc. Lilly's is positive daily and 3 days. So, but it's negative. Let's look at financials. Not a lot of red there. So Wells Fargo had a slight pullback. So, SPGI, 4-hour and daily. Those are the ones to look at. XLK, sort of, only in one news 3 signal on a positive CRM, and then we had negative on NVDA and AMD. That's in line with the negative signals we've seen on the SMH. Communications, T-Mobile, CMCSA, and Charters has a little green there. So Charters pretty much red across the thing. So, if we think that XLC is going to continue to move higher, that'd be a place to look. And then, we're not really adding to our positions in utilities at this point. You can see lots of red there. So, then if we start to see some 4-hour green in the next week or so, that might be a sign that the pullback in utilities is over. And, XLRE, pretty much, you can see the relative performance chart here. It could be bottoming, but, you can see these rallies in the past have failed, and that's kept us out of that one. So this week we get the ISM manufacturing on Tuesday, and the manufacturing PMI, construction spending, job openings, factory orders, etc. The beige book, auto sales. Then we get ADP employment a day later than normal, plus the services PMI, and then we have a hearing on the new Fed governor. That should be interesting. And then on Friday we get the unemployment report. So as long as the unemployment, they're looking for 75,000. So, if it's, 150,000, that's going to be a problem, probably a slight problem for the Fed. If it's lower than that, that'll should just reinforce, the fact that they're going to cut rates in the following week. Well, that's all I have today. So, as always, I don't get a lot of, I appreciate any of the comments, questions, etc. that you send in. So keep sending.